Well, for more on the ECB's decision, I spoke with Ann Pettifor, a global financial system analyst and macroeconomics policy research director. I began by asking her if she and others were surprised by the announcement.
Well, it seems to have surprised the markets, but really it's no surprise to me at all. I mean, the central bank, the European Central Bank, is single-handedly holding up the European economy. It's as if it were flying a plane with only one engine, the monetary engine, operating, and the other, the fiscal engine, switched off. And maintaining that plane, maintaining QE, in order to keep the European economy from further deflating, has been a heroic effort on the part of Mr. Draghi, and he's had no support on the fiscal side, for the fiscal engine, from Europe's politicians.
Now, Draghi has actually said that amid this uncertainty, the bank's job is to keep a steady hand on the economy. Do you agree, or if not, what should the role of the ECB be?
The ECB should behave as any other central bank, as the Bank of Japan or the Federal Reserve or the Bank of England behaves. It should support government policy. It should work in tandem with government policy and not in isolation. So what is so unusual and bizarre about the structure of the zone system is that the ECB doesn't have a government behind its back, and there are no governments with a central bank behind their backs. So, you know, it's because of the very bizarre architecture, if you like, of the eurozone system that this central banker is utterly isolated and as expected to do all the heavy lifting of the economy with just monetary policy, and it can't be done.
So what should we take from the fact that Draghi didn't comment on whether this is just an eventual phasing out or if this would be some sort of tapering off? He didn't really want to comment on it. So what should we take from that?
Take from that he's aware that all these billions of euros have made virtually no impact on inflation, that there is some sign of recovery in the European economy. There's some increase in activity and some decrease in unemployment, but it's still minimal. It's still, you know, unemployment across Europe was 10% per annum, and it's fallen to 9.4, 1.6 after billions, you know, after 960 billion euros over the last year. So it's clear that all of this effort is not having sufficient impact on the European economy, and that's why he can't say that he's tapering or switching off. And although he is promising to buy fewer purchases after April. And this has caused the markets to panic because the financial markets are so dependent on this life support, if you like.
And this announcement comes as investors are already anxious about the economic and political stability of the eurozone. So, I mean, you have Italy, you have the migrant crisis, you have uncertainty over when Brexit's actually going to happen. How does all this play into this now when you have the ECB's decision on top of that? What's the mood then in Europe for investors?
I think globally, investors are sort of frozen, waiting to see what happens in the United States. But I mean, there are a lot of worrying signs out there. There is the southern European countries, there is Italy and Italy's banking system, and whether or not the ECB will help support the banking system over this period, or whether it will insist on a bail-in, which will then trigger a crisis, I think, for Italy, but also for other banks in other countries. So there's all of that going on. But at the same time, there is the flood of money towards the dollar, which is reversing the flow of lending to the emerging markets. And that is what's signaling real trouble for the global economy as a whole, because a lot of the heavy lifting, again, has been done, if you like, by poorer countries, by emerging markets, not by the advanced economies. Now, if those emerging markets are no longer contributing towards economic activity globally, if they will begin to, if you like, retract, then there is something really serious to worry about. And I think it explains some of the panic around today's announcement, when actually he wasn't curtailing purchases, and he won't curtail purchases until April next year, and even then promises to continue ad infinitum. So I I think it shows how nervous and how skittish are the markets that they've reacted so strongly to this really quite moderate announcement today.